Listen to these, dear traders.
You get stopped because you buy when price is in a premium and you sell when price is in a discount. And this does not work. Here's why. See, just as you wouldn't buy something that's too expensive and sell something that's too cheap, the basic principle of commerce is found in the charts as well, more specifically in the concept of premium and discount, where a premium is considered a price level that's too expensive and a discount is considered a price level that's too cheap. Now, to put this into practice, we'll use dealing range theory, or DRT, where the market takes out both sell-side and buy-side liquidity to create a defined high and low in which price action occurs. Next, following our basic principles of commerce, we'll only sell when price is in a premium and considered expensive, and we'll only buy when price is in a discount and considered cheap.
Now, I know you are asking yourself, what is this premium and discount zones? How do I draw them? Where are they found? How do you know this is premium and this is discount zone? What is their importance in Forex? For you to understand this, allow me to show you everything about premium and discount zones. So, what is premium and discount levels in Forex? Premium and discount zones in trading are broad price areas derived from the previous momentum using a modified Fibonacci retracement. These areas give us a guide. To determine the premium and discount market zones, you need to use the Fibonacci retracement tool. In the settings you can leave only levels 1, 0.5 and 0. As an option, Fibo can be left standard with all levels, just emphasize the 0.5 level. Fibonacci levels should be applied to the entire previous impulse, from the first swing, the beginning of the impulse movement, and up to the swing where the impulse ends and the correction begins. Anything below the 0.5 Fibonacci level is a discount market zone. If the momentum is upward, then this is the most favorable range to consider long positions. Everything above 0.5 Fibonacci level is the premium market zone. In this zone it is logical to consider only selling. Accordingly, if the momentum is downward, then this is the most favorable zone for opening short positions. You should also realize that if the trend is upward, then even if the price is in the premium market, it does not mean that you should open short positions. If you have long positions, then you should make a partial fixation there. If the trend is downward, then you should consider short positions in the premium market. The level of 0.5, the middle, is also called as a level of fair price or equilibrium. The market can be considered locally on any time frame on which you open trades from the point of view of expensive/cheap. It is the middle of this range that will be the conditionally fair price. Total, if the trend is upward, we should consider any long positions only in the discount zone. If the trend is downward, we should consider short positions only in the premium zone. The Fibonacci retracement tool for determining the premium and discount zones does not give us an entry point. It is only a guide, a wide zone where it is profitable to buy or sell an asset. To determine the entry point, you need to focus on other tools of the smart money concept, OT zone, IMB, order block, etc. What is the OT zone in trading? OT, optimal trade entry, is optimal entry point. For this purpose, non-standard settings of Fibonacci levels are used to determine the depth of correction to the premium or discount zones. For the Fibonacci retracement, it is necessary to leave the main levels 0 and 1 and add correction levels 0.62, 62%, 0.705, 70.5%, 0.79, 79%. It is considered to be the optimal zone where the price makes its correction. The zone from 0.62, 62%, to 0.79, 79%, is considered to be the OT zone. It is desirable that our OT zone coincides with other technical analysis signals, then your trade is more likely to be positive. It is good if in this zone there will be an imbalance, a strong horizontal level, moving averages that you trade or something else that you apply in your trading. In summary, we always enter only if there is a complex of factors that complement one or another. If there are discrepancies, misunderstandings of the market situation, it is better to skip such a trade. In summary about the video you have heard at the beginning of this video. The most important thing is, you should pay attention to premium and discount zones. This zone shows the expensive and cheap zones for you to take trades from. For you to sell at premium zones, you can look at this levels, old high or low, rejection block, bearish order block, fair value gap, liquidity void, bearish breaker and bearish mitigation. For you to buy at discount zones, look if you can find either of these bullish mitigation, bullish breaker, liquidity void, fair value gap, bullish order block, rejection block, old high or low. When you see any of these, just know, you will be able to take trades confidently because it's an added confirmation. During your free time, you can consider looking at those levels that I have mentioned above, so that you will be able to understand them in depth. This brings us to the end of this video. Let me hope you have learned something. Don't forget to subscribe, like and share. Bye traders, I will see you in my next video.
You get stopped because you buy when price is in a premium and you sell when price is in a discount. And this does not work. Here's why. See, just as you wouldn't buy something that's too expensive and sell something that's too cheap, the basic principle of commerce is found in the charts as well, more specifically in the concept of premium and discount, where a premium is considered a price level that's too expensive and a discount is considered a price level that's too cheap. Now, to put this into practice, we'll use dealing range theory, or DRT, where the market takes out both sell side and buy side liquidity to create a defined high and low in which price action occurs. Next, following our basic principles of commerce, we'll only sell when price is in a premium and considered expensive, and we'll only buy when price is in a discount and considered cheap.
Listen traders, before you make any big mistake, like paying for that expensive course, try reading this book first. This is basically what you are going to be taught by your mentor. In fact, not even everything. If you are a beginner and you have learnt only basics, don't dare funding your Forex account because you will not like the results. This book will introduce you to another side of Forex trading because you cannot like forever buy at support and sell at resistance. This book comprises of everything you need to know about smart money concepts and price action, and everything is explained simply. Grab your copy at $10 only and it will save you from a lot rather than paying for
Now,
those so-called
if you want to kick off your
Forex journey, WhatsApp this number to order your copy. First come, first serve.